Good morning, gang. Happy Friday. So 9 o'clock on Thursday night for me and 7 o'clock in the morning for you guys. But happy Friday. All right, just a reminder here, if y'all haven't gone to Wednesday afternoon's video to register for tomorrow's giveaway, you gotta do it on that video. It's the only place you can put all your information on this one. It's not going to get picked. So you got to go watch Wednesday afternoon's video, the one that says 25,000 subscriber giveaway. That's where the only place that the entrants are going to be taken from. So just a reminder. All right. So want to talk about economics today, and I'm going to get a little wonky with you guys, but I'm going to break it down to the point where you don't have to have a PhD in economics to understand what I'm talking about, okay? So, because a lot of you guys had asked me yesterday about silver prices, getting whacked for about 6% and stuff like that, and what the hell happened, okay? So, a lot of things have happened this week, all right? And today, especially, is a huge day economically. So, we started out with the Federal Open Market Committee, the FOMC meeting, and the Fed came out and said that they expect consumer inflation to increase 3.4% in 2021. Okay, that's a full percentage higher than the March forecast. And almost double of what they were saying, where they said 1.8 at the beginning of the year. So, the Fed is way behind the power curve. We all know that, all right? And between Jerome Powell and Janet Yellen, they can't figure out what's going on yet. They're the ones in charge of monetary policy, which is scary, all right? But so what kind of happened with everything this week? Well, we start out with the meeting, and 13 of the 18 Fed members now are expecting the Fed to raise interest rates by 2023. Okay. Now, usually when that happens, the market tanks. Okay. Well, market's going up. So why did the market react in the opposite fashion? Well, there's a lot of speculation out there that Jerome Powell, Fed chairman, is actually going to continue quantitative easing. In other words, continue to reduce rates. Not that there's anywhere really he can go. We're practically at zero anyway. But he's telling the public that they're going to hike rates. So basically what you got is Wall Street doesn't believe the Fed. That's scary. Okay, that's very scary economically. All right. Now, so basically what you've got is the bond market is starting to price in another policy error by the Fed. Remember, I've told you guys, watch the 10-year. Okay, the 10-year is running about 1.51 right now. We've backed off, but we're still, that 1.75 is still the oh shit moment. All right. Now, then you get Thursday and the jobs update. Well, that disappointed the markets today with a weekly rise in jobless claims to 412,000 from 375,000 last week. In other words, more bad news. So why did the market go up? All right. This is what I'm saying. The market does not believe what the federal economists are telling us. Okay, which means the market is coming to our way of thinking. Is the Fed is just lying, all right? And that's no big surprise. I mean, we all know from inflation, but now we're starting to see it in other facets of the economic engine that is the United States. All right. Then let's not forget that today is quadruple witching. And like I said, I'm going to get wonky on you, but this is stock market stuff, okay? This means that today, stock index futures, stock index options, individual stock options, and single stock futures all expire today, all right? This usually causes some serious volatility in the markets, okay? Because people are trying to position themselves, because at the end of the day, they could be forced to buy, forced to sell, whatever would be, all right? Calls, puts, for those of you guys understand, all that sort of stuff. If that's not enough, okay, The dollar index, okay, that's the value of the dollar against a basket of 6 world currencies. So you got the euro, the Swiss franc, the Japanese yen, the Canadian dollar, the British pound, and the Swedish crown. Okay. Well, the dollar index rose to 91.91 on Thursday. That's the first time we've been over 90 since April 13th, meaning the dollar miraculously got significantly stronger just based on the Fed's comments. Now, if any of y'all are, most of y'all I think are, old enough to remember Alan Greenspan, okay, he could move markets just by how heavy his briefcase appeared, okay? And I was a broker at the time, and I remember markets moving 100 points. The Dow would move 100 points over a commercial break at CNBC. And remember, this is back when the Dow was about 10,000, okay? Because CNBC would tease a comment going into a commercial break. And all of a sudden, every broker and, in every brokerage house was watching CNBC. And so money'd start moving like crazy, buying, selling, whatever it would be. And, you come back, they could talk right after the break, we're going to talk about Amazon stock. And the thing would go up 3 points in the 2 minutes commercial. Okay. But, Jerome Powell doesn't have that kind of influence. But with everything that's going on this week and today, it's going to be a real wild day at the corner of Wall and Broad. All right. Now, to add even more craziness to all of this, Bank of America's chief economist, Alex Lynn, is now calling for transitory hyperinflation. Now, y'all know what Janet Yellen said and everything about transitory inflation. Oh, it's just we're going to have inflation for a short period of time and then it's going to come back down. B of A is saying we're going to have massive inflation for a short period of time and then it's going to come back down. That will, again, panic the markets if we get hyperinflation. All right. Now, we don't know what kind of number that Alex Lynn is forecasting, but I want to remind everybody about statistics. Okay. You can make statistics say anything you want. Okay. And the Fed usually does. Remember, the Fed says inflation's running at 3.4% right now, and we all know that's bullshit because we actually go to the store, okay? But I'll give you a quick fact. If inflation today was calculated the same way it was in 1980, okay, we would currently be at 13% inflation, okay? And I think we can all agree that's probably a much more accurate number from what we're all seeing than what the Fed's telling us, right? Now, remember 1980, okay? Paul Volcker was the Fed chairman. I was still in high school. And interest rates were in the high teens. We've talked about this before. A lot of you guys were talking about mortgages, 16, 18% mortgages, okay? You know what the inflation rate was in 1980? 13.5%. Calculated in 1980 numbers. If it was calculated now in 1980 numbers, it'd be 13%. Sound familiar? Okay. 13.5%. Jimmy Carter got his ass handed to him in the election in 1980, primarily because of inflation. He also had the gas crisis and the Iran hostage deal, but primarily because inflation. Carter had destroyed the economy. Gee, you know what? He had 4 years to do it. Biden's had 5 months. So that's kind of what's going on. Now, the difference is Volcker had raised rates to nearly 20%, and Jerome Powell is talking about maybe raising 25 basis points, 50 basis points by 2023. Okay, something's not panning out here. Okay, you can't have massive inflation and low interest rates. It just doesn't work. Okay. Now, kind of go into this. We all know commodities got crushed on Thursday. Like I said at the top, silver was down some 6% Okay. Gold dropped down to its support level in the high 1700s. Silver dropped down to 26. Everybody's going, oh my God, what happened? Why? I bought silver at 27. I bought silver at 28. Do not sweat the small stuff. This is fine. Okay. No big deal. What's going on is traders, okay, the guys on the floor at the stock market, listened to Powell and flooded the money into technology and growth stocks and ran away from value and safety plays, okay? And precious metals as a safety play. So they were selling their silver and gold and buying Amazon and Google and, whatever would be, your Facebook, FANG stocks, Facebook, Apple, Amazon, Microsoft, and Google. The big thing that caught my eye on all of this, though, is even though they ran away from value, they were buying long-term treasury bonds, 30-year treasury bonds, but they were not buying 1-year, 5-year, 10-year bonds. So what that's telling me is the traders are seeing a spike in the market here short-term for growth, for technology stocks. But in the long term, they're seeing a drop, and that's where the flight to safety. They're going for long-term safety, short-term gain. Okay, this is what a trader does, right? They're trying to make money daily. So, they're playing the market. So what the market's telling us right now is that in the very near term, you'll probably see a rise in the market. In the long term, they are all expecting it to drop. Again, I still stick by what I said is we will see Dow under 20,000 by the end of the year. I still stick by that, and these numbers are proving I'm going to be correct, okay? Because even now we're starting to see economists come out and say, expect a 30% drop in the Dow. Well, I said this in January, they're saying it in June, okay? A 30% drop in the Dow from where we are now is about 21,000, okay? Give it a break. So, have I confused the hell out of you yet? Okay. So don't worry, let me put this into perspective, okay, even if I even can, all right? So here goes. Expect a lot of volatility in the stock market today, especially in the last hour. You're going to probably see a nice run up in the markets early today and then a sell-off at the end of the day, but the markets will probably close higher, okay? So that's for all of those of you guys that day trade, and today you better have balls the size of Texas, okay? For the rest of us, now is a great opportunity to buy precious metals. $26 spot on silver, $17.75 spot on gold. That's basically support. This is an opportunity to buy the bottom, guys. Okay, this is on sale. You're going to see a bounce in this. Okay, I bought more on Thursdays, probably a hair earlier, but I did get more. Okay. The Fed is telling us that they don't see inflation harming the economy for a couple years. But I think the public knows better, okay? Remember, the Fed chair and all these guys, they're politicians too. They may be appointed, okay? But they're appointed based on their thinking. I mean, Janet Yellen was, in there under Obama. Trump told her to go fly a kite. Biden comes in and she comes back, okay? So, they're political, whether or not you believe it or not. So they're doing stuff that's going to make the current party look good too. They're not just working for the American public like they're supposed to and have, the financial interest of the country in there. We all know politicians do not have the financial interest of the American citizen in their best interest right now at all. So don't think the Fed does either. And Wall Street is starting to pick up on that pretty quickly here, okay? As for food prices, commodities for the most part dropped yesterday, but are rebounding overnight, so don't expect to see any drops in food prices. So basically, in a nutshell, inflation's going to continue. Silver should stay cheap for a few months, okay, the 26 to 28 range. Food and gas aren't dropping anytime soon, and the stock market bubble is going to inflate some more before it pops, okay? Yeah. Welcome to this brain. Okay, this is what I did this evening after working on the smokehouse, because I know a few of you guys were going, what the hell happened? And I wanted to kind of give you the reasons, but I can't just say, well, gee, it's down. I needed to give you the whole picture why. And there's a whole lot of stuff that had to go in there. I hope you guys learned a little bit from this. Again, I'm not giving anybody financial advice. I'm just trying to give you maybe a little bit of market economy education here, because again, part of prepping is finances and getting those straight. And on everything I do is I try to see ahead of the game so we can be prepared for it before it happens. I don't like being reactionary. I like to be out in front of the thing. So, kind of like gas prices with Colonial. We were all buying gas on Saturday and Sunday when the rest of the world comes up and goes, "What the hell happened? Why is gas prices up on Monday?" And we're just going, ha, ha, ha. You should have listened. We were buying it 20 cents cheaper 2 days ago. Same point here. All right. Trying to do what I can to help. I hope that for those of you guys that actually are still listening at this point of the video, you'll learn something. But have a great Friday, guys. As usual, something comes up, I will be here. Have a good one, y'all. Pinball out.